Hello and welcome to my channel. So inheritance tax is quite complicated, and the most important thing when starting off in working out what your inheritance tax issues are is to establish the size of your inheritance tax problem. So today's video is all around how to do the calculations for inheritance tax, because once you establish that correctly, it's easier to know what sort of action you need to take. I'm also going to go into what I believe is the biggest mistake that most people make when dealing with their inheritance tax issues. Hi and welcome back. So my name's Charles Delastic. I'm the Managing Director of Bluebond Tax Planning. We've been helping clients eliminate inheritance tax for more than 18 years now. And today's topic, as I said, is going into inheritance tax and the calculations. So first of all, you've got to establish, are you actually liable for inheritance tax? Now that falls around what's called your domicile. So domicile and establishing domicile is actually quite complicated, but it depends upon where you were born and where your father was born. Now, if you weren't born in the UK, but you happen to be living here, you have to have lived here for 15 out of the last 20 years, or if you're likely to do that, then you are going to be classed as deemed domicile. In which case all your worldwide assets will be liable to UK inheritance tax. If you were born in the UK, your parents were born in the UK, you've lived here all your life, your domicile, there's no doubt about that, and therefore your worldwide assets are also liable to inheritance tax. Now, if you are a person who is non-domicile and effectively, in other words, you weren't born here and you've been living here less than 15 years, or more likely you're living abroad, then you're only going to be taxed for UK inheritance tax on your UK assets only, and you still get the normal allowances. Okay, so what are the allowances? So every person gets what's called a nil rate band. So the nil rate band is currently 325,000. Now it's been frozen for about 9 years, but it's supposed to increase at consumer price index. Now that's different to retail price index. So consumer price index on average tends to grow at about 1% a year. But the problem, as I see it, is that with the COVID crisis and Brexit and all of those issues and the amount of debt that the country is in, I could actually see this nil rate band being frozen or growing at a lower rate for a long period of time. But that is the allowance, 325, and every person gets that. Okay, now every person who has a home in the UK and that home is valued over 175,000, also gets what's called a residential nil rate band. So this was only introduced not so long ago, 5-6 years ago, but that also increases supposedly at consumer price index. Now the workings of the residential nil rate band is quite complicated. So, but very, very simply, the main thing to watch out for, if on the second death of a married couple, or if you're single and divorced, and your estate is worth over 2 million on the second death, for every £2, the value of the estate exceeds the 2 million, you lose £1 of the residential nil rate band. So as the allowance is 175, if it's a married couple, that's 350,000. So if you're losing £2, losing £1 for every £2, effectively, if the estate on the second death is over 2.7 million, that means the whole residential nil rate band is lost, which means an extra £140,000 in tax. So that's something to be quite careful of and make sure that you're not falling foul of that. And this is mainly where people have got high value house prices and therefore probably later on in life considering downsizing is probably not a bad idea. Okay, so that's the residential nil rate band and the allowances. The main thing with these allowances that everybody gets 325 plus 175 if they're deemed domicile or domicile, and these allowances are transferable to a civil partner or a spouse on death. So what happens if you're widowed? The question here is were all the assets on the first death passed to the surviving spouse? Yeah? If that's not the case, in other words, somebody says, okay, I'm going to leave 100,000 to my children, the rest to my wife or whatever, then a percentage of the nil rate band is transferred. So it's not the figure that counts. So let's say the nil rate band was 300,000 at the time of death and 100,000 was passed outside, then 1/3 of the allowance is lost. The other 2/3 is passed to the surviving spouse. So the thing to be careful of, it's not a figure, it's the percentage of allowance that's transferred. Now, if you were widowed in the past and now you're remarried, then very interestingly, because you have, if your deceased spouse passed everything to you, then you have an extra nil rate band allowance and an extra residential nil rate band allowance. Now, to utilise those allowances, in other words, most married couples have 1 million of allowance, but somebody who's been previously widowed could have up to 1.5 million of allowance. But what you need to do is you need to do some quite specialist planning and utilise trusts to make sure that those allowances are all claimed. And therefore, if you're in that situation, it's certainly worth speaking to a specialist advisor on that regard. Okay, so now I'm going to go into a couple of examples. So let's say we have a married couple who've died and their assets are worth 1.5 million. So they've got an allowance of 325 plus 175 times by 2, so therefore their allowance is 1 million. On the second death, the tax is, so there's no tax on the first death if the first spouse dying passes everything to the surviving spouse. Okay, on the second death, 1.5 million of assets, 1 million of allowance, 500,000 is taxed at 40%, so that's £200,000 in inheritance tax payable. Now, also, you've got to take into account any gifts that you made. So if you made any gifts in the previous 7 years, whether they're into a trust or directly, they get added back into your estate. Now, if you remember that there's something called taper relief, but that only applies to gifts in excess of 325,000. A lot of people miss that. So if you don't understand that, you could watch my video, how the 7-year rule really works. So also you need to, I'm presuming that you've used your £3,000 annual gift allowance. If you haven't, then that could still also be added in. So therefore, if somebody's died, then an extra 6,000 could be added to their allowances across the board. Okay, so that's how the calculation works for inheritance tax. Now let's take a second example. Let's say we've got a married couple and they've got a £3 million estate. So they now lose their residential nil rate bands, and they lose both of them. Yeah, because remember, it's over 2.7 million, you've lost your entire residential nil rate band. So then you would say 325,000, which is a nil rate band, times by 2, which is 650. Therefore, 650 take away from 3 million leaves 2,350 times 40%, which is £940,000 in tax. Now, obviously, that's a significant amount of tax. So what can you do about it? Well, you can make deathbed gifts, for instance. So you could gift, for instance, your main residence when somebody is on their deathbed, and providing you can get the conveyancing through, then there wouldn't be any capital gains tax, for instance. It would be a failed potentially exempt transfer, right? You wouldn't get taper relief because taper relief only cuts in after 3 years, but it would reduce the value of the estate fairly significantly for the purposes of getting one's residential nil rate band back. So if somebody can get their estate back under 2 million, they can save a lot of tax. But again, you need to be careful of the capital gains tax implications around this. So specialist help and advice is essential should you be doing something like this. Okay, so that's the second example. So now I want to get into what I believe the biggest mistake. Now you can use our website calculator to work out your inheritance tax now. And if you presume the youngest of a married couple dies at about 85 or 90, depending upon your health, that's the thing that people don't do. They don't project their inheritance tax forward, because we've calculated that in most cases where people have got high value properties especially, your inheritance tax will potentially double every 15 years. So if your income matches your expenditure and you've just got assets and they're increasing in value, every 15 years or so, the amount of inheritance tax you calculate today could be double in 15 years' time. And that's the mistake. People don't do the projections on the value of their assets. So the projections would involve properties rising at 3 or 3.5% a year. But of course, as I said before, your nil rate band and your residential nil rate band is only likely to increase at 1 or 1.5%. That's if it isn't even frozen. So projecting forward is the mistake that you shouldn't make to establish what your inheritance tax problem is. So if you're in your 60s and your total asset base is 800,000 and you think, oh, okay, we've got no inheritance tax, that's right. You haven't got a problem today, but by the time you potentially die at 85, you may have a significant problem. So that's the issue. The other big issue is people not taking action early enough and making sure, because of the 7-year rule and giving assets away, it's important to take action early on dealing with your inheritance tax problem. The bigger your estate, the more important it is to take action early. There is no such thing as too early, because no one knows when anyone's going to die. So it's important to make sure that it's taken into account in your overall financial planning. Okay, so in summary, the inheritance tax calculations can be complex. It's important that you talk to an experienced advisor so everything is taken into account, especially if you've made gifts and gifts into trust and you hold unusual assets or you've gifted stuff away. Also if you own businesses and things like that. So the problem can be more complex, but it's making sure that you get the calculation right at the beginning to know what the issue is and therefore how much urgency you apply to it. So I would explain to make sure you get help from an experienced advisor. We at Bluebond understand the legal side, the tax side, and the financial side. So call us if you need any help on your inheritance tax planning. Thank you and goodbye for now. Bye.